What's going on, traders? Welcome to this video. In this video, I want to be talking about risk management. Not just risk management when it comes to placing your stop loss and your take profit. No, I want to be talking about something that is a lot more elaborate. I see a lot of people who are basically setting and forgetting their trades, meaning they set a stop loss and a take profit and they leave the charts. While for beginners and people who might have issues when it comes to management from an emotional perspective, I do understand that that can be lucrative. But when you get to a more intermediate or professional level, it might become a lot more interesting to actually actively manage your positions. This, of course, has to be done in a mechanical and rational way. Now, before I get into the nitty and gritty, I quickly want to highlight that I am not a financial advisor. None of this is financial advice. This is for educational purposes, and this is how I personally trade. My strategy is basically a strategy based on liquidity, a strategy that I've been trading for quite a while. And I also use some ICT concepts on top of that to actually teach my students how I trade, how I look at the market. It helps really well. If you're interested in this video, I also have an elite membership, which is currently open. So if you are interested, we have some spots available. They are, however, limited. So if you're intrigued by the content, just keep in the back of your head that I do teach people how to do this. So let's get right into the video here. I want to talk about two main things and then I'm going to cover some on the chart examples. So the first instance is when not to manage. I would personally say when you have imbalance left or when you have a reason overall where the market could return to a certain level, I would say do not manage at all. Now, I have written two situations here, for example. So let us quickly grab the highlighter here and let's assume that we entered a position right here. So you took a short right here and you're in a position. Now you're kind of scared because we just took out this specific low right here. So what do? You move your stop loss to break even. So right here, you're break even. What happens? Price moves back upwards, refills the imbalance before moving down. And you will see this happen quite often. So to summarize, when you have no imbalance left, it's usually interesting in some occasions to actually manage. But when you have imbalance left, you will often see that the market comes and rebalances that first if it is planning on making a really sharp or harsh move to the downside. Of course, do not believe my word, just go and look at the charts for yourself and you will probably see this happen quite often. Now, a second instance, let's quickly assume that we do not actually have any imbalance left. Right here, would it be lucrative to start managing as soon as we take out this low? No. Why? We have our protected high, right? And our protected high is basically where we liquidated people in the market. It usually doesn't have an intention of going back to. So our stop loss is initially set right here. Now, what do we see? The market comes down, liquidates and start moving lower. Now this liquidation, the reason for that is pretty simple. If you know about the market maker buy or sell model, you will know that this is a natural event occurring in the cycle, in a fractal cycle on each and every single time frame. I do cover this in depth and more refined in the course. It's very difficult to cover all of this in this specific video. But basically that's it. So try to avoid managing when you have imbalance left and also try to avoid managing risk if you, for example, still have an open high or low, and most importantly, when you displace below a certain level. So when might it be interesting to actually manage? That is if price would print something like this. If we just tap or wick below that previous low and then start shooting up again, we can assume that this right here might have actually been a liquidation. So at that point, it might be in your best interest to exit the position and potentially re-enter if a re-entry occurs, right? But in this instance, we can clearly see that the market's intention are not to sweep this level. Rather, we are displacing below it, which is showing intent to the downside. Now, let us talk about when to manage, right? So we covered the second thing here, which was the sweep. But the first thing is that all imbalance basically got mitigated. And that is usually for a scenario where you have something along these lines. So let us go from an instance where we have two bits of imbalance. We have our first FEG and we have our second FEG. Let's assume that you entered your position right here and you're managing above candle number 1 from this top FEG. We can see that price actually comes back to mitigate that before moving lower, right? That is a scenario where managing your stop loss above your entry is usually not that lucrative because we will usually see this filled or the move is going to be less big and perhaps a little bit explosive, but the follow through is not going to be that significant. If we see something like this occur, where we leave that imbalance open, let me actually quickly draw it with the marker. If we see a move like this, then it's usually for us to really come back up sharply, and it will likely not be to continue to the lower end because the market doesn't like to leave imbalances. We are not going to waste any money. We want to consume all that liquidity, or at least the algo would like to do that. So let me cover a whole scenario right here where we are actually going to be talking about how I would personally manage, and I actually drew my stop losses right here. So let's assume I took this position, I took a short right here, the market starts trending lower. I do not touch my stop loss at all. The first instance where I would touch my stop loss is at the point where we close with a really bearish candle or several bearish candles right here. At that point, that's where stop loss 1 comes into play. Now, why is that? If we take a closer look, we mitigated all of this imbalance and we also swept the liquidity from our entry, which means that a lot of people got liquidated and we also managed to mitigate imbalance. So the market is rebalanced and we have efficient pricing because we swept liquidity. Then the market starts moving lower. We see a little bit of an accumulation phase followed by a sweep. My students will know this is a really clean power of 3 entry, or we could capture a continuation entry right here. That is where we could move our stop loss 2 towards. Now, why is that? Because sometimes when the market has enough liquidity with what is built up here, or another scenario where there is just simply not enough liquidity accumulated below these lows just yet, what will the market do? It is going to first liquidate all of those people who were into shorts first, right? So we are going to take that out because we have built up liquidity right here. We liquidate that liquidity before then shooting lower, where now there will be quite a bit of liquidity accumulated. With the stop loss management in place right here, we avoided a loss or a break even simply by looking at our market structure and our concepts. We know that if we sweep liquidity right here, we should see a follow through to the lows. If it doesn't happen right here, it will likely not happen, or we will be in a deep pullback, which is usually, when it comes to capital management, not in your best interest. Now, this is all nice, but this of course is all theoretical. So let's actually jump to the chart and give you a proper example. I know that some students of mine actually took an entry somewhere around here, and I quickly wanted to highlight how I told them to manage this position in particular. So excuse my marker, by the way, this is from the trades I took today. I still need to journal my final trade here in my personal journal, so I'm just gonna leave that on right here for now. All right, so let me quickly box out this situation right here, or draw a little circle around it so we can easily find it on the higher time frame. All right, so looking at this bit of movement, what happened here? We had a sweep of liquidity and we rebalanced a 15-minute fair value gap right here, as we can see. We had a really strong reaction, which we can clearly see on the 5-minute here, followed by a strong move to the downside. Now, this strong move to the downside swept liquidity. So that is something that we should be wary of. But on the contrary, we know that our drawn liquidity, which I map out in the Discord on the daily, by the way, I do these daily markups and I have an 88.5% accuracy. So my drawn liquidity usually hits. So that's very nice. If you're interested in that, that's actually included in the elite mentorship. But right here, we know where our drawn liquidity is. So a lot of my students were thinking, okay, we have our sweep and we have our imbalance right here, so I'm going to take an entry. Now, I told them beforehand, I drew this line. I said, look out guys, we have some trend line liquidity on the top. So it's very dangerous for you to be taking full risk entries because we could just as well move to the upside, sweep that liquidity, and then start running lower. So some of my students decided to enter, and I basically gave some guidelines on how to actually manage this position. If we take a look at the 5-minute, what do we see? We see that the fair value gap basically aligns with the one on the 1 minute. So we know that if we take an entry, we should technically be respecting that fair value gap. And as soon as we violate that fair value gap, it's probably no longer in our interest to be taking short positions. So let us map out how some of the students actually took this trade. It was looking something like this, with their target being the drawn liquidity. All right, so what did we see? What did we see happening on the 1 minute here? We actually had a decent reaction to that fair value gap. The down end right here, tested it once again, and then started moving lower. Now, our first indication that this might actually not be working is that we never actually violated our bullish FEG, which means that if we don't violate that the buy program is still active. We need a violation before we can actually say the market is likely going to continue to the downside. We never violated it. We also noticed that we had a sweep right here where we reacted to quite aggressively. Now at this point, let me mark it out. At this point right here, what do we see? The market swept liquidity, right? Right here, we do two things. We sweep the liquidity and we also mitigate the imbalance. So as soon as we see that and we see that reaction, what can we do? We can move our stop loss to right above that high. So now we have our stop loss in place and it seems like price wanted to reverse, but then it said, nah, I'm gonna continue to the upside anyway. We can also logically explain that by the sweep right here. Started moving higher, and what did we take out? We took out this level before I noticed a really sharp reaction where I actually entered a position. And in this position, I personally didn't have to manage anything. My TP got hit in a matter of minutes and I was happy. But this right here on the left is how I would have personally managed this position and how I think most of my students have managed it. This right here is like a 0.3 R loss. That is very, very much more acceptable than a 1 R loss, right? On an account where you risk $1,000, you lose $300 instead of $1,000. To me personally, I think that is great. That is great risk management, and this is something that intermediate or professional traders could for sure be doing. That's what my students do, and that's what I teach them to do. That is basically going to cover what I wanted to say today. I do have one question for you guys though. I would really appreciate it if you could leave a comment in the description whether this is the way you currently manage your positions. I would also appreciate it if you could leave a like, or if you leave a dislike. I would love to know why you didn't like the video. And if you want more content like this in the future, feel free to subscribe and turn on the bell notification. Also, if you are interested in that elite community, make sure to check out the links in the description. And other than that, there is always the free Discord server where I drop my trades taken on the daily, of course, with proof of execution. I'm not one of those gurus that just posts his trading view screenshots. In fact, what I will do for you right now is I will actually show you that I in fact took this short on you right here. Here it is. As you can see, this is the short that I took. Here is the MetaTrader screenshot. Took my short entry right here and exited right at the low. And this is something that I do on the daily. You can also check that out on Twitter, by the way. But anyway, guys, I appreciate you watching this video. I hope you enjoyed it, and I will catch you in the next one. Take care.